how tax lien foreclosures work, and how you can profit from them. Welcome back. Since 1972, I've been involved in real estate. Most of our years in the first part of that period were single-family homes, condominiums. Then I grew up and started doing office buildings, apartment properties. But I've found a great way to make more money with a lot less risk. What did that turn out to be? It turned out to be foreclosures, and it turned out to be tax liens and tax defaulted properties. So here's how you're going to profit from that. So I just want you to kind of open up your eyes, and I'm going to shed some light on a lot of common misconceptions that you want to know about. But I'm going to concentrate on tax liens and tax deeds, and I'm going to integrate that with the foreclosure material. Now, you're also going to find out how to take advantage of these markets and make some big profits for you and to be able to take care of your family. Now, the examples that I'll show you a little later on, you'll see people that have made profits buying for 10 and 20 cents on the dollar, and you'll be able to do the same thing. But before I finish this video, I want you to understand, when I finish, I'm going to tell you about two big mistakes. So hang in there. So you want to learn what those two big mistakes are. Newcomers make them. Experienced investors make them. You don't want to do it. So let me show you how to do that. It'll be at the end of this video. I'll be right back. Now, you're going to be amazed at what you're going to see over the next few minutes and hear. But I'm going to first start out with some foundational information, just give you the baseline of this tax lien foreclosures and regular mortgage foreclosure. I'm going to make sure that you understand the difference between those two. Now, the real estate business is not what you just see on television, where everybody's making a fortune doing foreclosures, everybody's doing fixer-upper properties. They have these shows where you can sit there and watch, and it was just a little tract house, and the next thing you know, it was a mansion, and that all took them 29 minutes to do. How much money does all that cost, and how many years' experience, and how many workers do you need? Well, that could be pretty expensive. So let me show you how to make money with real estate, and let's do it in a very down-to-earth manner, okay? So most people don't understand that there's a difference between a mortgage foreclosure and a tax lien certificate foreclosure. Much different markets, okay? So the banks have a business of lending to homeowners and to farms and ranchers and whatever. They want to lend money on real estate property. So when they lend that money, that property actually is the collateral for the loan. So they might be loaning $100,000, $200,000. They could be loaning big dollars. Now, if the people don't pay the mortgage, well, what are they going to do? They're going to have to recover that collateral. Now, that's called the mortgage foreclosure. Well, what if they're owed 95% loan? What if they lent 95 or 97% and they foreclose? Well, you don't want to be at that foreclosure auction. You're not going to pay 95 or 97% and make a profit. So the mortgage foreclosure market is a little on the tough side right now. Now, there was a time that was a great business, but it's going to take an awful lot to make work. So here's a better way to make money. In the real estate business, they've always had people that didn't pay their loans. Well, at the local county level, the county said, wait a minute, you might not pay your loan, but you got to pay your taxes on this property. So they don't tolerate anybody not paying taxes. So for over 200 years, everything I tell you right now is 200 years old. Local counties got together with the legislature, and they created a process where they have to collect the taxes. Now, why do they collect the taxes? Well, it's real simple. The taxes they collect are called property taxes. They're usually about 1%. They're not very high. 1% tax. Well, if you don't pay it, the local government, first of all, the treasurer is going to send you a levy. They're going to levy on the property. Next thing they'll do is they say, we've come to collect. And if they can't collect, then what they'll do is they'll confiscate the property. They'll just confiscate it. When they confiscate it, they wipe the mortgage right off the property. And then they want to sell it. Now, why do they want to sell it? They just want to sell it so they can collect the back taxes. All the treasurer really cares about is collecting back taxes and keeping property on the tax roll. Now, you probably don't know about tax liens and deeds, but tax lien certificates pay 16, 18, 24%. If you'd like to find out what your particular community does, your state, I'll be happy to tell you that. Just comment below that you'd like to know about that. As a matter of fact, when you do that, I'll send you a little gift. I'll tell you more about that in a few minutes. But let's go back to these tax defaulted auctions and the foreclosure of them. All right, so the treasurer has been given this power to collect taxes, and if they don't get paid, they take the property. But they're not in the business of real estate, so they're going to put that real estate back into the market at a very low price. And that low price is going to be very close to back taxes, maybe 10 cents or 20 cents or 30 cents on the dollar. Now compare that with a mortgage foreclosure, where they're foreclosing on that giant loan, and that giant loan might be 97% of the value, but a loan could be $100,000 or $200,000. So where do you want to be? Do you want to be paying 97% for a property, or do you want to get it for 5 or 10%? Well, you don't have to be a mathematician to figure that one out. All right, now the legislature made all these laws. The local treasurer has to execute them. And so when you buy a tax defaulted property, you're going to buy from the treasurer in the county that you're at. Now, that's a powerful way to be able to do business because, number one, it's local. Number two, you can do it online. Number three, you're doing business directly with the government. The beauty of this whole business is you don't invest with Ted Thomas. You're going to invest directly with the government, and you're going to get a check back from the government. All right, so remember that treasurer has a lot of power, and when they confiscate a property, they wipe the mortgage off the property. They don't tear the mortgage up, they just wipe it off the property records, and guess what? The person that has the mortgage, they still owe the money. They still owe it, and they still owe it to the bank. And so now the bank's got a real problem. So how do these tax certificates work, and how do these foreclosures work? Well, this episode is all about how tax lien foreclosures work and how you can profit. Now, you profit this way. Number one, anybody can attend a tax auction. Number two, anybody can bid. Number three, the starting bid is going to be 10, 20, 30 cents on the dollar. How good is that? Did you ever hear of real estate where you could get 70, 80% discounts? Well, that's what we're talking about here. 80% discount for the starting bid. Well, if you can get a property for 10 or 20 cents on the dollar, I know you could mark it up a little bit, make yourself a profit. So I said I'd show you how to make profits. Tax liens, tax defaulted property, that's the market you want to be in. All right, now how do you end up with properties in this market? You end up in this with properties because, number one, the local governments, half of them will sell tax lien certificates. When they sell those tax lien certificates, they're going to sell them to collect money for taxes. All right, if you buy a tax lien certificate, you don't get possession of that property. What you do get is you get a certificate. So those counties are very benevolent. You're not going to get possession of the property, but you're going to be able to make 16, 18, 24%. Now, that's a nice way to make money. There's also another way. Other states will sell tax deeds. When they sell those tax deeds, they're selling those for 10 and 20 cents on the dollar. If they're selling for 20 cents on the dollar, you're getting an 80% discount going in. So which foreclosure do you want? A mortgage foreclosure with all that loan on there? Or do you want to buy a tax foreclosure where you're going to get 70, 80% discount? Think about that. So most people have a lot of misconceptions about mortgage foreclosures, tax lien foreclosures. Well, the tax lien and tax deed business is far superior to the mortgage business. Now let's go back and look at a little bit of history. Anybody that's more than 25 years old has heard of this. Okay, in the years from 2005 and 6 through 2008 and up to 2012, the lenders would loan anybody money. You just went in and signed up and anybody could get money. So they lent too much money pretty quick. There was too many people buying houses. And the market went up, 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 and everybody thought they were going to be rich, and then it crashed. Now, when it crashed, the financial system wiped people out. I mean, it wiped people out. It was brutal on the investor. Brutal is an understatement. Investors got killed. But the people that owned property, real estate property, they were severely punished. Severely punished. If you owned a property in Phoenix, Arizona, you saw the market drop 20%, 30%, 40%. The market in Phoenix, Arizona went down 70%. Las Vegas went down 70 or 80%. Houston went down. Miami went down. Name a town. Everything, the markets crashed. And all the people that had been paying their house payments all those years, they were watching the housing drop 20%, 30%. They dropped as much as 70% depending upon where you were. So the financial market made everybody suffer because they overdid it. Now, I want you to think what I'm going to say right now. Let's say there was $1 million house and you'd worked all your life, and now the markets crash all the way down 70%. Now your $1 million house is worth $300,000. You've lost all your net worth. Well, the average person in the United States, most everything they own is their property. And to watch all those markets crash, it was not only a shame, but it was brutal. Everybody lost. There wasn't anybody that did. All right, many of those properties, the banks never were able to collect any money on because their bank loan was 2 and 3 times what the property was worth. You don't want to be involved in that market. So you want to buy, you want to have value, What you get value is buy it low, sell it high. Every real estate person teaches that. I teach people to buy it low and just sell it right there low. Buy it low and sell it low like Walmart and Target does. All right, if you're a conservative investor, you need to give some thought to what I'm talking about now. You need to start investigating tax lien certificates. You'll find out they're predictable, certain, and secure. Then you want to investigate about tax defaulted property, where they're selling property for 10 cents, 20 cents on the dollar with no mortgage. Now, both of those businesses have been around for 200 years. Nobody's going to tell you about it. Brokers won't tell you. I'm going to tell you, I've been an educator for well over 25 years, and I've taught a lot of people about that. They don't find this from their attorney. They don't find this from their financial planner. But I'll tell you all you want to. Just stay tuned. I'm going to do 2 questions right now. Can you talk about your buy low, sell low strategy? I'm happy to do that. I'm probably the only real estate person that says that, because I know what real estate is about. Everybody wants to talk about the hype. And the hype is buy it low and then get rich. Well, I don't believe in that hype, because I'm a long-term investor. I'm a value investor. So what I want to do is I do want to buy it low, nothing wrong with that. And I want to buy it without a mortgage if I can. And then what I want to do is I want to sell it again, because I don't want to own all the real estate. I want to use it as an income vehicle. So what I do is, if I can get an 80% discount, then what I do, so that means I bought it for 20%. So what I'm going to do is I'm just going to mark it up to where I own it at 40%. I'm going to sell it at 40%. I make a nice little profit and move on to the next one. There are so many properties, there's so much abundance that I can do this, and I've been doing it for 25 years. So you're going to learn how. Just keep checking in on my videos. Okay, so let's talk about some examples of that. For example, I have a client that started with me in Phoenix, Arizona, and that client spent $11,000 on a tax lien certificate. So they put $11,000 in, and what they intended to do, they thought they'd get paid. They didn't get possession, so they were waiting to get paid. Well, at the end of 2 years, they didn't get paid, so they went to the county and said, look, we haven't got paid. And they had, prior to buying it, they had gone out and looked at a property. It was a nice property. They liked what they saw, and so the county went through a process, a legal process, and they were awarded the property. So they didn't want another property; they already had one. So they had spent $11,000, and they were supposed to get 16% interest on their tax certificate. Well, they didn't get paid, so they were awarded the property. So what did they do with the property? They sold it. Now, they sold it by having Zillow sell the property. So they didn't do a lot of work. All they did is buy a certificate. So their investment was $11,000. And when they sold, after commissions, they got paid $169,000. Now let me say that again. They invested $11,000 and they got paid $169,000. That means for every dollar they invested, they got $17 back. I mean, this is a powerful investment environment. I mean, how many deals like that would you have to do in your life? All right. 97% of all the tax lien certificates are going to pay you whatever you invested plus 16, 18, or 24%. All right, that's what you're going to get paid. All right, in this case, they didn't get paid, so they got the property. That's happening across America every day. You need to get in on it. Well, what most of you don't know is that a number of years ago, I started in real estate in the 70s. In the 80s, I had a big business. And in 1989, I wrote a book, and this is the book I'm just holding up. And the big book, the title of it is Foreclosure Profits. Now, this is a big, thick book. You couldn't get that in the bookstore, but I wrote one that's a little smaller than this for the bookstore. It stayed there for 12 years, and then, of course, times changed, so whatever. And I went from the foreclosure business to the tax lien and deed business. So I've written more than one book on it. So this book turned out to be a bestseller, and I don't have time to show you now, but on my wall, on the certificate at home, I have a certificate on my wall at home from the copyright people that I actually copyrighted the name Mr. Foreclosure. So that's what people used to call me back in the 90s. So I have a little experience. Now, there's another book I wrote about foreclosure. It's called Foreclosure Gold Mining. And this one here is called an illustrated guide. So I have a lot of experience at foreclosure, but I made a transition. And I'll tell you, it's so easy, you'll understand the transition in a second. When a bank lends money, they're going to lend a lot of money, okay? So they're going to lend, let's say, a $100,000 house. It wouldn't be unusual for them to lend 80%. But in the marketplace today, because taxes have gone up and people don't have any money, they're lending 97%. So if they lend 97% on that property, and the people that are in the property have a crisis, like a divorce or any kind of crisis, what's going to happen is they're not going to make their house payment. All right, so the bank's going to foreclose. That's going to be a mortgage foreclosure. Now, in that mortgage foreclosure, all the bank wants is its property back. They want its collateral back. So they've loaned 97%. Well, if you bought a property for 97%, you can't get over 100 to sell it. It's not going to sell more than 100. So how could you make money? So it's very difficult. So what people have tried to do is they go to the bank and say, you got to discount your loan. Well, the banks don't like doing that. That's a major undertaking. Now, if you could be a really good negotiator, the bank might say, yeah, we'll drop it down to 80% of what we owe. So they take a loss. Well, even if you bought a property 80% of value, by the time you pay the broker and do some fix-up, if you got enough room. So I had to outgrow that business, and I could see that it wasn't going to be a profitable business in the future because the banks were lending too much money. So now I discovered the tax lien and deed business, which has been around for 200 years, and now I looked at that and said, wait a minute, I can get an 80% discount. I'm not going to pay 80%. I'm going to get an 80% discount. I'll buy all day long at 80%. I can show you tons of properties I bought at 20 cents on the dollar, 30 cents on the dollar. I'll do that all day long. I can make money every single weekend if I want, and so can you.